Hey, good morning. Let's go over today's trade plan. So the main catalyst this morning was the employment report due at 7:30 a.m. Central Time. So far, we've seen a directional move to the upside off of the 2160 half high volume node. And heading into the open, we're going to be using the 59 to 61 area as the initial support as well as the bull bear zone on the day. So at this point, we know that if the market holds 59 to 61, then the buy side can maintain control. Now, ideally, if buyers are to remain in control, then we don't even get a pullback to 59.61. So the idea is that since the directional move has already started off of the 60 half high volume node, at this point, if we're going to get continuation, then we really should not come all the way back down to the 59 to 61 area. And if we do come back, then that doesn't really bode well for the overnight move, and it could turn into a failed breakout attempt. On the upside, this 64 quarter, 65 quarter is a reference area. It marks the balance area high prior to the breakout move. So if we are holding above it, that's just a confirmation and a signal that the buyers are continuing to maintain control. On the upside, the first area of resistance is 69 to 71. That is really the launching point of the move that we saw a couple of days ago. So that's still going to be valid resistance on the upside. Beyond that, we have this week's RTH high at 72.75, and then the all-time high at the 76 to 78 zone. Now, despite the upside move here in the overnight session, our short-term bias for the day is still going to be fairly neutral. We know that the buyers are in control, but we have to see signs in real time that support the idea of the buyers retaining control. So in order for the market to hold these higher prices and continue going higher, we do have to see broad market strength, a rising AD line. We ideally want to see some continuation in the momentum with the NYSE tick holding above zero. If all of those bullish signs are present in real time, then we could be going higher, testing 69.71, possibly 72.75. And if there is sufficient momentum and the other markets are also rallying to the upside, then perhaps we can retest 76 to 78. But we don't want to become so extremely bullish because of this overnight breakout attempt that we start initiating trades at very poor location, or that we're not being mindful of what's needed in the underlying internals and momentum in order for the market to go higher. So we still need to maintain that flexibility because the markets are close to pretty decent resistance. And if there's not enough reward to risk in the trade on the upside, then we're not really going to be able to position long to take advantage of a move higher. So the best thing is to wait for some momentum to come into the market and then perhaps get involved on a pullback, probably based on some real-time support that may establish, because ideally you don't want to even see the market pulling back to 59.61 if the buyers are to maintain control. On the downside, in the event that ES fails at 59.61, or if this ends up being a failed breakout attempt with the other markets also failing and breaking below their overnight lows, we could be looking at a move quite easily back down to yesterday's low at 54. And at that point, there could be a shift in control from the buy side to the sell side. So in the event that we break 59.61 and this becomes a failed breakout attempt, then we could be in a situation where there could be trapped buyers in this market. And if that's the case, then 54 could quite easily be tested, and 49 to 51 half would be very much within range. And if we are really going down on heavy momentum and broad market weakness, then even 45 quarter and the 41 quarter to 43 quarter zone would not be out of question. Even those areas could potentially get tested. So, based on what we know right now, based on what we're seeing in the market right now, ideally the market holds 59.61, it holds above yesterday's high of 63.5, and we continue to make our way up into 69 to 71. Perhaps there's some response over there, and after some balancing, we can then go higher, test 72.75 and potentially 76 to 78. Looking at the other markets, Nasdaq made a new marginal high beyond the 47.60 area, so NQ seems to be leading to the upside. Russell was lagging, but it's now attempting to catch up. So you want to see all those signs continuing to support the buyers if that overnight bullishness is going to continue. But like I said, you just want to be flexible enough so that you don't get overly bullish, because we are near some decent resistance. And if there is not sufficient upside momentum, then we could just continue balancing in a range before the market makes another move to the upside. So for now, our focus is going to be on the long side, but timing the trade is going to be important. Short setups are to be considered, but we are going to be more cautious with them. And if we're seeing a lot of upside momentum and the other markets are really just rallying, then even 69.71 may not be a spot to short, because even though there may be a reaction at that zone, it may not be enough of a reaction to provide decent reward to risk. So right now we just have to be very selective with the trades that we take, because we are still technically stuck in a balance, and the markets are still trading within a range, and we just have to be mindful of the fact that the volatility has slowed down recently as the markets have come back up. So far, volume is rising, but it's nothing amazing. It's also Friday. We're heading into the weekend. So, it's a market where we just have to be pretty careful on both sides, just because we are trading at a pretty elevated price here, close to some decent resistance areas. So just be patient. Don't be overly active on a day like this. Ideally, the buyers do maintain control. And if that's the case, then we should not get any major pullbacks. And that 59 to 61 is really going to be the key in determining whether this breakout is going to hold or whether it's going to turn into a failure. So those are the main thoughts heading into the open. Let's keep an eye on the initial support zone. Yesterday's high, 63.5, and the 64 quarter, 65 quarter area. That's going to also help establish bias off the open, and we'll take it from there.